Welcome, ladies and gentlemen. My name is Peter Yusuf. I'm the senior analyst of IronFX. Together, we'll be going through a webinar about the week ahead in the Forex market. Before we start, though, please allow me to show you our risk warning and disclaimer. I'm leaving you a couple of seconds to read it. And as you're reading it, allow me to make a small intro. Now, the past few days saw a plethora of high-impact financial releases and central bank interest rate decisions rocking the markets. At the same time, it should be noted that US inflationary pressures are on the rise, while the Fed's dovishness was on display once again during Fed Chairman Powell's testimony before the US Congress. Now, the coming week is expected to be more easygoing, yet may still have some events which could create volatility in the markets. As for financial releases, we note on Tuesday Japan's CPI rates for June, and from the US, the housing data for the same month. On Wednesday, we get Japan's trade data for June, as well as Australia's preliminary retail sales growth rate for June. On Thursday, we get France's business climate, UK CBI trends for industrial orders, and the US weekly initial jobless claims figure. On Friday, we get the UK retail sales growth rate for June, and from Australia, France, Germany, Eurozone, the UK, and the US, the preliminary PMI readings for July, while from Canada, we get the retail sales growth rate for May. On the monetary front, we note the release of RBA's latest minutes and ECB's interest rate decision. Now, with no time to waste, let's start, and we start with the USD. This would be the USD index for our chart. Now note how the index has been moving in a sideways motion, finding a ceiling at the R1, 92.75. It has met it once, twice, 3 times, maybe even 4 today. We tend to maintain a bias for a sideways movement. Should we switch it for a bullish outlook, we would require a clear breaking of the upper boundary, being the 92.75, and for the index to start aiming at the 93.45. Now, another level to be noted to the upside would be the R3, 93.90. To the downside, we note the 92.30, the 91.75, and even lower than that, the 91.30. Now moving to USD's fundamentals. Now the USD seems to be edging higher for the week against a basket of its counterparts. It should be noted that inflationary pressures in the US economy seem not only to persist, but even to grow, as the headline CPI rate for June reached a new 13-year high on a year-on-year level. On the other hand, Powell, in his testimony before the US Congress, struck a dovish tone. The Fed's chairman eased market worries for a tightening of the bank's monetary policy, as he stated that high inflation seemed linked to the US economy's reopening, that it would be a mistake to act prematurely, and that the economic conditions for tapering the bank's QE program were still a ways off. Now, fundamentally, the greenback, assuming also the role of a safe haven instrument, tended to enjoy some inflows as market worries for the spreading of COVID-19 due to the highly transmittable Delta variant of the pandemic tended to intensify. As for financial releases from the US next week, we note the release of the number of housing starts and building permits for June on Tuesday, and on Thursday we get the initial jobless claims figure, which, by the way, reached a new post-pandemic low in its latest release, and then we also get the existing home sales figure for June. In Friday's American session, we get from the US the preliminary market PMI readings for July, which are to show whether and at which rate economic activity expanded for each sector of the US economy in the particular month. Leaving the USD behind us and moving to GBP, this would be GBPUSD for our chart. Note how the pair has a tight sideways motion, range-bound motion, just around the 1.3845 level. Now to the upside, we definitely note that, and even higher the 1.3990, which capped the pair's upward price movement around the 22nd of June. Even higher than that would be the 1.4145. To the downside, we have noted the 1.3670, the 1.3525, and the 1.3350. For the time being, we maintain the view that the pair could continue on a sideways motion, and for it to change, we would require a clear breaking of either the 1.3990 R2 to the upside or the 1.3670 to the downside. Moving now to the pound's fundamentals. The sterling remained in a tight sideways motion for the past days against the USD, yet seems to be strengthening against the euro for a second week in a row. Fundamentally, the main event in the coming week for the pound is expected to be the ending of lockdown rules and social distancing measures in the UK. Measures such as wearing a mask and self-isolation and working from home are to be removed from Monday the 19th of the month onwards. Given that the UK PM himself admitted that the pandemic is not over yet, and the rise of new daily COVID cases to levels not seen since mid-January, the UK is taking a considerable risk. On the other hand, should the UK succeed in its endeavor, i.e. reopen without NHS reaching its limits, it could signal a huge success. It should be noted that the UK government warned that it would reinforce COVID measures should the number of cases get out of control. On the monetary front, BOE policymaker Saunders stated that the bank may need to taper its QE program fairly soon, given the inflationary pressures in the UK economy, which resembled BOE Ramsden's comments the previous day. Now, the comment strengthened the suspicions of the market for hawkish tendencies to exist within the bank, which could provide some support for the pound. As for financial releases from the UK, we note on Thursday the release of CBI trends for industrial orders for July, and on Friday the release of the UK retail sales growth rate for June, as well as the preliminary PMI readings for July, with special focus being placed on the services sector indicator. Moving now to JPY, and this would be USDJPY for our chart. Once again, the pair seems to be moving in a sideways motion, albeit the range band movement is far wider in this case. Now we have noted to the downside the 109.90, lower than that the 109.25. Note how nicely the level has practically reversed the pair's downward motion around the beginning of June, and even lower than that would be the 108.45. To the upside, we highlight the 110.90. Higher than that would be the 111.70, and even higher than that would be the 112.40. Moving now to JPY's fundamentals. JPY seems about to end the week break even against the USD. Fundamentally, the country is still being tormented by the pandemic, given that the number of new daily cases is on the rise, while the Olympics are to start next week. Restrictions in the land of the rising sun seem to get tighter, and the games are to be held without spectators. Worries seem to be on the rise among the local population for the possibility of visitors spreading the disease, and the overall situation seems to have an adverse effect on Japan's PM Suga, who has seen his popularity fade away as his approval ratings drop. On the monetary front, BOJ's dovishness was evident in today's interest rate decision as the bank lowered the expectations for the GDP rate, at least partly due to the emergency measures enforced in Japan. It should be noted that BOJ Governor Kuroda stated that the bank will not hesitate to take additional easing steps if necessary. Now, the renewed state of emergency to weaken the spreading of COVID-19 could hurt local consumption and increase the reliability of the growth factor for the economy on exports. As for financial releases from Japan, we note on Tuesday the release of Japan's CPI rates for June, while on Wednesday we get Japan's trade data. Moving now to the common currency, and this would be EURUSDs for our chart. Now the pair has also been moving in sideways motion, and that's been going on since the beginning of the month. We note as an upper boundary the 1.1885, And as a lower boundary, we note the 1.1785. We tend to expect the pair to maintain this sideways motion for the time being until it decides on the direction of its next leg. For us to switch the sideways bias, we would require to see a clear breaking of the 1.1885 to the upside, aiming probably for the 1.1990. While for a bearish scenario, we would require a clear breaking of the 1.1785 and the pair to start aiming for the 1.1695. Note how the RSI indicator is quite at the reading of 50, also implying a rather indecisive market. Now, moving to the common currencies fundamentals. The common currency is about to end the week low against the USD, and the downtrend seems to be forming in the daily chart. Fundamentally, the path of the pandemic remains the main issue for the Eurozone, yet the number of new daily cases seems to remain rather low, at least in France and Germany. On the monetary level, we highlight the ECB's interest rate decision on Thursday, and the bank is widely expected to remain on hold, keeping the refinancing rate at 0% and the deposit rate at minus 0.50%, with EUROAD implying a probability of 90% for such a scenario to materialize. Now, beyond the rate setting level, the importance of the July meeting is highlighted, as ECB President Lagarde stated that the bank will change its guidance on the next policy steps to align it with its new strategy. It is expected to be clearer, simpler, to the point, and crispier, with as little jargon as possible. Overall, any signs of tapering the bank's QE program may be premature, and we expect the bank to maintain a dovish tone, which could weigh on the single currency somewhat. Also, we would highlight Lagarde's press conference, which is to follow the release and usually tends to create some volatility for euro pairs. As for financial instruments, we would note on Tuesday Germany's producer prices for June, on Thursday France's business climate for July, and Eurozone's preliminary consumer confidence for July. Yet the highlight could be the release of the preliminary PMI readings for July on Friday for Germany, France, and the Eurozone. Moving now to the Aussie, and this would be AUDUSD for our chart. Once again, a sideways motion. Practically, we note to the upside the 0.7465, higher than that the 0.7530, and even higher than that the 0.7595. To the downside, we note the 0.74, lower than that the 0.7335, and the lowest level noted would be the 72.65. Moving now to the Aussie's fundamentals. The Aussie seems about to end the week lower against the USD for a third week in a row. Employment data coming out of Australia were pretty mixed in the past week, with unemployment rate dropping, yet the same happened also with the employment change figure, both for June. It should be noted that China, Australia's maybe closest trading partner, had a slowdown of industrial production for June, as well as the GDP rate for Q2 and the import growth rate for the same month, and all combined may have disappointed Aussie traders. On a fundamental level, the spreading of COVID-19 through the highly contagious Delta variant is not good news for the commodity currency, while back home news that Melbourne entered a snap lockdown did not help much either. On a brighter note, prices of iron ore are rising and could provide some support for AUD, given that Australia ships a high amount of exports of the mineral. At the same time, RBA's dovish stance and loose monetary policy tends to also weigh on the Aussie, in a stark contrast with neighboring confident RBNZ. We highlight the release of the bank's latest meeting minutes on Tuesday, in which we expect to see how deep this dovishness actually is. As for financial releases, we note on the 21st of July the preliminary retail sales growth rate for June, and on the 23rd of July we get Australia's preliminary PMI readings for the same month. Moving now to the Canadian dollar, and this would be USD CADs for our chart. Note the upward trend line, as the pair has broken above the 1.2560 resistance line, now turned to support. Also to the upside, we note the 1.2645, higher than that the 1.2745, and even higher the 1.2835. To the downside, we have already mentioned the 1.2560. Lower than that would be the 1.2470, and even lower than that would be the 1.24. Once again, we remind you of the bullish or upward trend line, which seems to be guiding the past price action. Moving now to the CAD's fundamentals, the loonie reached an almost 3-month low against the USD and is about to end the week in the reds for a third consecutive time. It should be noted that CAD's weakening was present even despite the BOC deciding to taper its QE program last Wednesday and maintaining a rather confident hawkish tone. Now, the bank lowered its expectations for the growth of the Canadian economy to 6% for the current year from previous estimate of 6.5% and seemed willing to allow the economy to run a bit hot on the way to complete recovery. In the oil front, it should be noted that oil prices dropped during the week, and that may have discouraged cut traders as Canada is a major oil producing country. Oil prices tended to suffer as the rise of COVID cases may slow down the recovery of oil demand levels. While at the same time, the recent spat of Saudi Arabia with United Arab Emirates about oil production levels may result in higher output. We would also like to highlight that the CAD as a commodity currency is prone to fluctuation depending on the market's mood, as it is considered a risky asset. As for financial releases, loonie traders may have a rather empty calendar, with the exception of Canada's retail sales growth rate on Friday, the 23rd of the month. As a general comment, and before we leave you, now as a closure, we expect the USD to reign over other currencies, yet fundamentals may take the lead given the low amount of high-impact financial releases stemming from the US. Safe havens may take the initiative should the market display a risk of attitude due to the spreading of COVID cases. Now, besides the FX market, we also note that the equities market could gain on attention, given that currently it's earnings season for stock markets and equities tend to generate lots of headlines. At the same time, gold prices are about to end the week higher for the 4th consecutive time, albeit a correction lower seems to be taking place today. Gold's prices tended to benefit over the week as US yields dropped given the high demand for treasuries. Should the same tendency be present on the coming week, we may see gold prices gaining further, while the USD could weaken. That should sum it up for the day. From all of us here at IronFX, best wishes for solid trading.